What's going on, money makers? I'm Brandon Robinson, president of Calvary Realty. Look us up on Google. We got 5 stars. So congratulations, you just closed escrow and you got this big pile of money, $10 million in net proceeds. What are you gonna do? You gonna cash out, pay 40% in taxes? Or are you going to do what's called a 1031 Tax Deferred Exchange? What is a 1031 Tax Deferred Exchange? Well, I'm glad you asked. 1031 is a section of the IRS code that allows an investor to reinvest proceeds from the sale of real estate and defer paying capital gains taxes. So instead of you paying $4 million on $10 million of sales proceeds, you can actually take that money and reinvest it into another piece of real estate. All right, let's go over some of the rules and the terminology of 1031 tax deferred exchanges. Number 1, you got what's called the down leg. Now, the down leg is the property or properties that you are selling. This can also be called the relinquished property. You have something that's also called your up leg. Your up leg is the property that you will be purchasing with the sales proceeds. Then you need a qualified intermediary or also an accommodator. And what this is this is a third-party company or person that has an agreement with the IRS to hold sales proceeds on behalf of someone conducting a 1031 tax-deferred exchange. Your accommodator account, this would be the account where your sales proceeds will be held until you use them for your next acquisition. There's also something called the same taxpayer requirement, which is whatever name that was used for the vesting and the title of the relinquished property, that is the name or the LLC that you have to use for the property in which you are purchasing. So if I sold something under Brandon Robinson LLC and I want to do a tax deferred exchange, I have to buy my next property under Brandon Robinson LLC. I can't change it to ABC Corporation, otherwise that would cause some issues with the IRS. There's also like-kind investment, and like-kind investment means that if I'm selling a piece of real estate, I have to 1031 exchange into another piece of real estate. I can't sell real estate and use the funds to purchase crypto or shares of stock and qualify as a 1031 exchange. That's not going to happen. It has to be like property. And the property that I buy has to be of equal or greater value than the property I sold. If I sold something for $5 million, I have to buy something for $5 million or more under the 1031 exchange rules and requirements. Also, I have to replace whatever debt that I had on the property that I sold. If I had $1 million of debt on the property that I sold, I have to buy properties and put at least $1 million of debt on those properties, or else I'm subject to something that's called taxable boot. So taxable boot is the portion of the sales proceeds that may be subject to taxes. So you don't have to use all of the funds for your 1031 exchange. For example, if I sold something and my net proceeds are $10 million, I could pull $1 million of cash out of that for my own personal use, but I would be taxed on the $1 million, and then the remaining $9 million, I can use that for the 1031 exchange. So another example of taxable boot is if I had a loan of $2 million on my down leg property that I relinquished, and I decide I want to buy this next property cash. I don't want to get a loan of $2 million. If I decide to pay off that $2 million note, then I am subject to taxes on that $2 million. There's something called an identification period, and this is that period of 45 days that I have to identify at least 3 properties that I plan on purchasing. And this identification period starts after the sale of my down leg, after the sale of the property that I relinquish. So if I sold the property on December 1st, I have 45 days from December 1st to identify 3 properties that I will potentially purchase with my 1031 exchange funds. And last thing you need to know is that there is an exchange deadline of 180 days. So from the time that you close escrow on your relinquished property, you have 180 days to close escrow on your up leg or the property that you are purchasing. If you don't close within that time period, then you will be subject to capital gains taxes. Hopefully this video gives you some brief understanding of 1031 exchanges. If you would like additional information, please contact us and we can put you in touch with companies that specialize in 1031 exchanges. Again, if you'd like to complete a 1031 exchange by selling your property, or if you're looking to buy another property with a 1031 exchange, Calvary Realty would love to be of assistance. We have 5 stars on Google. Until next time, keep making money.